I learned through my mistakes. Unfortunately, I learned through my mistakes. And when it comes to money and building wealth, I have made more mistakes than I can imagine. Now, you relate. You have made a dumb mistake in not investing in a certain area. Maybe you didn't get in on Bitcoins, or, you didn't get in on a certain stock and you feel like you fall behind. But I'm going to share with you today how to learn from these mistakes and how to reframe your focus to get better results. I'm Justin Hitt with Sustainable Wealth Secrets. One of the keys of turning your income into wealth is not the latest stock trend. It's not the latest cryptocurrency. It's not the latest Forex trade. It's not the latest secret trading technique. From a marketing perspective, those triggers are great for getting people to buy a product or buy into a service, but they're not about you creating wealth. It's about the person who's selling it creating wealth. The true secret to wealth and turning your income into net worth is actually very boring and basic, and it starts with bookkeeping. I know I probably just lost half the listeners, but please stay with me. Understand that bookkeeping is the only thing that's going to give you an understanding of where the money is going and where the money is growing. This is very important to understand, because if you're spending every day out of your pocket, maybe you're using the petty cash method where the money in your pocket is the only money you have. And at the end of each week, you settle it up and everything you spent out of pocket was meals and entertainment. If you go to the end of the week and you put $1,000 in your pocket at the beginning of the week, and at the end of the week, you've got $1, so $999 went to meals and entertainment, that tells you something if you're going to move towards wealth. Now, it also tells you you're spending a lot of money that you can't account for. And so you may want to reassess whether that was all actually meals and entertainment. Do you see where we're getting here? The outflows, the composition of outflow helps you understand where the money's going. Because I've been in this situation. I've made six figures. In 8 to 9 years, I made more than $1 million gross take home in my pocket. I'm not saying it to brag. I'm just saying because I don't have $1 million sitting around anywhere. Okay, to help you understand, the money came in and the money went out. Now, if you're doing the bookkeeping, you can ask yourself the question of the money that went out, how much that money is invested, how much that money is circulated, how much money of that money is spent. Now, what do I mean by this? Money that is spent has gone away and will never come back. Now, you could have spent it somewhere and had an enjoyable experience. You could have bought a car. You could have bought a home. You could have bought something for your kids and build a relationship. I'm not judging the spending because, again, there's discretionary spending and there's, spending is pretty much required. You have to pay your utilities if you want the comfort of heating and air conditioning. But there's also money that's invested, money that you've put away for the future, and you've protected it from inflation, for example. It's going to grow with appreciation, but it's just money that's away and can't be used right now. It hasn't added to your income. It hasn't created passive value or equity. Then there's money that's circulated. Now, the wealthy use circulation. They move money around. All these billionaires, Elon Musk, Bill Gates, and all these people, they do something with their money. They're not just like Scrooge McDuck with a giant pile of money that they swim through every day. They really don't have the amount of cash that you could imagine. Now, when I say the cash in your pocket is the only money you have, I'm talking about structure, asset protection, things like that. Many wealthy individuals are the same way. They literally own nothing and are very happy about it because their companies own things. Their trust owns things. Their charitable remainder owns things. Their organization owns things, and they are circulating money through systems that create assets that cash flow. See, I don't hold anything back here because I know that most people who listen to these podcasts are not taking notes. They're not really thinking about anything. They're really just driving a car down the road and they're filling in the space. But there are a select few of you out there that will listen carefully and take notes and understand it. If you know where the money's going, then you can make a decision about where you've sent the money, and the money that you spent is not coming back. The money that you invest may be coming back in the future, but we don't know a lot about the future. But the money you circulate is coming back now while building the investment for the future. And so let me share a simple structure. If you own a company, the money comes into the company, the money goes and builds the company. That's the circulation, building the potential of that asset to cash flow. And then the money that you take out is spent by the company, not by you. And then that can be used to cover your day-to-day expenses. Now, if you're measuring this with bookkeeping, you're avoiding problems that comes with, you are able to support the asset protection. You're able to pay your taxes on time. You're able to understand where the money's going. You're able to prevent fraud. You're able to do a lot of beneficial things. But I hate bookkeeping. I hate it with a passion. I feel like sometimes when I'm sitting down for a couple of hours, just entering in receipts and entering in records, that I'm missing out on something. So we want to assess that time and look at the cost benefit of that time and determine whether or not we're getting value. Now, again, if we're talking about spending, investing, and circulating of capital and the accumulation of capital, that is one of the benefits of bookkeeping. So today I have no opinion about bookkeeping because I like to see P&L reports that are clean. I like to see balance sheets that are growing. I like to see the numbers look right so that we can just file taxes, which I'm not always able to file my taxes on time because they're more complex than I can do. But here's my point. If you want to turn your income into net worth, that is going to be your balance sheet. If you want to invest or circulate capital, you need free net cash flow to do that. That is your profit and loss. So you can reward yourself on a weekly basis by having a clean profit and loss, by having a clean balance sheet. And the way that we do that is we simplify our finances. And that's where we're back at the concept of the money in your pocket is the only money you have. See, the rest of the things like your utilities and your internet access and some day-to-day expenses, they're just common regular expenses. In most accounting systems, once you get your account set up and once you get those things linked out, that's going to just happen. The other expenses that we have or the opportunities to circulate money, those require decisions. So if you got to buy a piece of property to rent it out, that requires decisions, that requires activity. Those things, if packaged in a company, now give you the opportunity to hire somebody else to do the bookkeeping. And now you've moved to an oversight role or a decision-making role. Instead of working in the business, you're now working on the business, and your role is the investment. Same thing happens if you bought an ETF. Same thing happens if you buy into a limited liability trust, like some kind of asset that's paying a dividend or a cash flow. If you bought into an organization as a minor shareholder and you're getting a dividend out of that, or you're a partner in an investment fund or anything that's available to you, you've now compartmentalized the asset, leverage other people to manage it, and then ultimately can make a financial decision from a single dashboard, which again is your P&L, profit and loss statement, and your balance sheet. Now, I'll give you a little warning, and it's been a frustration of mine for years, is that not all of your accountants or not all of your bookkeepers will work from the P&L and from the balance sheet. Very often you need to work with a CPA or a tax attorney who's going to look at these things, because from the balance sheet, we can tell where our assets and liabilities are. And then we can ask the question, are our liabilities able to be turned into assets? Or how can we reduce our liabilities? Now, it's okay to have a lot of liabilities. It's okay to have a lot of assets. It's okay to have whatever the composition is of those reports, because it's a objective, non-biased presentation of your financial situation. And that, again, helps us make decisions. So can you see this flow of things? The money is not a static thing. You receive money in your paycheck by giving service and value. You've traded time for dollars. In order to escape time for dollars, we've got to put that money someplace where it's now working on your behalf, whether it's working on your behalf through individuals, through assets, through structure, through investments. The best kind of investments are going to be assets that cash flow, meaning there's no liability tied to it, and those assets are free and clear. And then ultimately, any money you put in circulates through a system that returns more money than you've put in. Now, the time it takes to circulate through the system, we want it to be as short as possible, but we want the whole system itself to be stable. The bookkeeping helps us understand the checks and balances on the back end. Then we can start moving towards structure, which is going to be what's the process for investing. So I've developed over the years programs like the percentage-based budget, the balanced portfolio. These things are built on actual implementation and practical analysis. And the reason they turned into a booklet, and you can build your own booklet or you can build your own home study course in a sense, is because we wrote down as a couple the procedure we use to assess the retirement portfolio, or the procedures we use to assess whether we're going to buy a house or not. Now, again, you could go online and find out people's recommendations, but until you sit down and think about those recommendations and structure them within the context of your profit and loss and of your balance sheet, you're going to have a difficult time, because there's a lot of opinions about what you should do, but you are the only one that can make the decision. You making the decision gives you power. You making the decision gives you control. You making the decision positions you to understand what the hell's going on so that you can turn your income into net worth. Now, if you haven't already come up with these objections, there are many reasons people don't want to do the bookkeeping. I'm just going to give you the dumbass excuses that I had that caused problems in my life. So I mentioned I've had financial problems. I've been bankrupt. I've had situations where I owe people money. I've had situations where I had more money than I knew what to do with. I've had situations where over a short period of time, I've made significant amounts of money. Now, the mistakes that I've made was believing that the bookkeeping was time away from money making, or time away from investing, or time that I had a negative opportunity value. It was that case when I wasn't doing bookkeeping the right way. Like when I said, oh, you know what, QuickBooks is no good. I'm just running a small business. I should have Quicken Home and Business. And then I take all these weeks and months to transfer all my accounts into this new platform. Or I go to work with a new bookkeeper, and the bookkeeper has some proprietary platform that can't export P&L reports for some dumb reason. But I'm okay with it because they're doing all the work. But then when it comes around the tax time, I get a tax report that doesn't make any sense. And I'm saying there's no way we had that many losses. It's impossible to have that much loss. And then I go in and I realize that they took a distribution, or they took a money into the business as rather than owner's equity, they took it as like income. And that's why it doesn't make any sense, because instead of weekly going through the books, and we have a program that talks about what you need to do each week and what you need to do each month and what you need to do each quarter and what you need to do each year. But the point is, because I wasn't taking the time each week or each day to understand what my money is doing, I ended up having a surprise at the end of the quarter when the taxes came in. I ended up having a surprise at the end of the year when I had debt that I didn't know existed. I've also had the situation where somebody has embezzled. So I had staff and two individuals that sit right next to each other in the office, were independently of each other. Like the other one had no idea. Actually, they used two unique methods of embezzling money from me, completely independent of each other. They stole about $100,000 total, and they stole it in time wasted and actual cash and such. I was embarrassed about it, but again, having a podcast, I want you to understand that I have made dumb mistakes. I would be probably a multi-millionaire if I had made so many dumb mistakes. But again, lessons learned. I'm not living a bad life. I'm doing pretty good. My point being is that it was bookkeeping that helped me understand. So we got the books caught up. I had a change of bookkeeper. I wasn't proficient at doing the work. I wasn't setting the hour or two that's necessary each week. And I go to get the books straight, and I noticed that these individuals, there's a lot of invoices. What they were doing, what one of them was doing, is padding their timesheets and of billable work. And we ended up having a bunch of invoices to clients that I couldn't clearly understand. Basically, there may not have been any work done. So to save face with the client, I discounted a bunch of invoices. I basically didn't bill them the work. So if I couldn't verify and have evidence for each line item that I needed to invoice, I didn't invoice the client. And so the worker got paid, but I never got reimbursement. On the other person, they had actually done they were setting up, I was receiving invoices from fake vendors. And then the money was going out to a vendor, which was actually some P.O. box that they had, and they got paid instead of an actual vendor. Do you see what I'm talking about here? Do you see what we're going through here? The underlying factors here is that it was just bookkeeping that fixed this stuff. Now, I don't want to sound like a complete dunce, but I consider the $567,000 I spent in my first computer consulting business as an expensive experience. Now, in hindsight, I had $500 and some $1,000 to pay for it, but that money is lost to the mistakes. So the lesson I want to share with you here is if you're worried about the time it's going to take, it actually is part of understanding and making better decisions. And then also it reduces your liability. So whether the liability is identity theft, I was doing my bookkeeping once and saw like $6,000 or $7,000 in transactions that were a credit card fraud. Once you see that, if you see it at the end of the month, now you're within the 30 days or the 45-day window of reporting. You can go file a police report and you can go to your credit card company and then they're going to take care of everything. There's another case where my wife got a phone call that basically said she was in trouble. Don't get off the phone. We're calling you from the police department. Here's what we're expecting you to do. Is basically a fraud case. They were trying to get her to buy gift cards or something like that. And because we had sat down on a regular basis to talk about these things, we knew that it was fraud. We were able to file an FBI report and we didn't lose any money. Again, the open conversation with your spouse or your significant others, or even sometimes your entire family about how money works, where the money's going, how we can use the money better, what are our goals financially. The actual bookkeeping and record keeping, even George Washington had record keeping in a notebook. It doesn't matter how you do the record keeping, as long as you're consistent, as long as it's up to standard, meaning someone else can come in and take over the records for you. And then ultimately it moves you towards the financial goals that you have, meaning you have to have financial goals, then you're not losing anything. Now, if you're not proficient with bookkeeping, as I've had the problem in the past, you very often can hire an accountant or some kind of outside firm. And I do have a special report on how to hire an accountant or hire a bookkeeper. But since I haven't been very successful with it, outside of hiring somebody inside of a company, then I don't want to make that recommendation to you in a generic sense. It really is individual. For some people, they like to send all their records away and have it entered. For other people, it can be all electronic. And for some, they like to have the hands-on. And so really, we can do a consultation about that. But do you understand what I'm talking about here? Do you understand that wealth is actually not difficult at all when you know where the money's going, what the money is doing, and ultimately how the money is benefiting you? And because again, money isn't the only aspect of wealth. We also have the opportunity to understand how we're having a relationship with that money and what that money is doing as far as our family relationships, our safety, our security, and all the other elements that are necessary to have a good life. I have been fortunate to have more of the things that make a good life than I recover from losses very quickly. I'm pretty resilient. But the underlying factor is there isn't like Scrooge McDuck money anywhere. And I don't even know if that's what I want. But ultimately, the principles have been consistent with the people I'm interviewing. If you ask a billionaire, if you ask a millionaire where the money's going, they have a pretty good idea at some level. If you sat Warren Buffett down and say, where's the money going? He'd pull out his annual report. And that annual report probably has quarterly and monthly reports that he can go in and reference. Somebody is preparing that for him on a regular basis, and he can look at it. If you go to the Millionaire Next Door, they most likely have some system for managing money, which includes circulating the money so that when they spend money or they invest money, it comes back quickly. Now, quickly to them could be 30 days or it could be 12 months. It's really up to the individual. But if you are implementing this, starting with the foundation, which is some kind of record keeping, you're going to be more organized. You're going to have less liability. You're going to have a better understanding so you can make better decisions. And you're ultimately going to stop living paycheck to paycheck. Many times when we live within our means, it requires the discipline of having those guardrails. And another time we can talk about the emotions that cause people not to do bookkeeping. We can talk about the self-esteem issues that cause people not to want to look at their checkbook or do their bookkeeping. And then we can talk about the educational elements, but we're out of time. So if you have questions about any of those elements or what we've covered today when it comes to bookkeeping as a foundation of asset protection, a foundation of wealth growth, then visit us at www.sustainablewealthsecrets.com. There's a contact page where you can ask your questions, and I'll answer those questions in a podcast, a video, or a webinar. We also have a number of special reports and resources that if you ask a question that matches that, we'll get you information on how to get started with those types of things. There's a number of courses and, of course, free resources as we've been doing this podcast for more than 10 years now. So visit us at www.sustainablewealthsecrets.com and ask your questions. I'm looking forward to hearing from you. I'm Justin Hitt with Sustainable Wealth Secrets, where we help you transform your income into net worth, where we help you gain wealth that cannot be bought with money, wealth that supports you financially, wealth that serves you and your needs. And we do it in this lifetime. We do it with the income that you got, and you get the results that you can measure. Thanks for listening, and I'll see you in the next one.